Good morning, everyone, and welcome to our December TechKnow Invest Webinar, presented in conjunction with Vertical Events. Thanks for joining us for what is our final online investor session for 2025. These webinars are designed to give investors, analysts, and industry followers direct access to leading technology, life sciences, and biotech companies, offering meaningful insights into their progress and their outlook for the year ahead. We've got an exceptionally strong lineup today. We're covering oncology, digital health, advanced robotics, and late-stage clinical development, all sectors with compelling catalysts heading into 2026. Today's format is a 10-minute company presentation, followed by a 5-minute live Q&A. So during the presentations, submit your questions at any time using the Q&A button on your screen. Let's get started. Our first presentation today is from Race Oncology, led by Managing Director and CEO, Dr. Daniel Tillett. Race is advancing RC220, a next-generation formulation of bisantrene with a clearly defined mechanism as a G4 DNA RNA stabilizer. Strong IP protection, including 20 years of potential exclusivity, and multiple clinical programs underway. AML and EGFR mutated lung cancer is an area of focus. Daniel, welcome.
Thank you, David. Next slide, please. We can skip over that one. So I just wanted to give, before we sort of jump into all the detail, a bit of an overview of Race Oncology. So we've been listed on the ASX now for almost 10 years, but in that 10 years, we've undergone an enormous evolution in the company. We've moved from, we have a clinically validated drug that's been all the way through to approval for acute myeloid leukemia. It was never actually taken and sold, but it was certainly taken all the way through to approval. And the reason why it wasn't was because it was unable to be easily delivered to patients. We've gone through and reformulated the drug. That's RC220. This overcomes the problem that the original formulation had, and that has provided us, with IP protection around the formulation. But even more importantly, we've made various composition of matter discoveries about the actual molecule itself. We've identified that only one of the isomers is active, and it changes its activity via being exposed to light, and that has provided us with composition of matter, which we just filed a couple of months ago. So that process is heading through the patent process. This provides us with a really strong IP position, and alongside that, we've done a lot of research to work out actually how this drug works. So bisantrene's been around almost 50 years, but what it hasn't been is known how it actually worked. And it turns out that unlike the original assumption that it was a boring old chemo drug, it turns out to be a really very, very interesting, particularly targeted drug to a particular structure in DNA called G quadruplexes. And I'll talk a little bit more about that later. Consequence of all of this is we have many value drivers over throughout 25 and 26 and into 27. A lot of activity going on, a lot of clinical activity, a lot of preclinical activity, and a lot to look forward to. So if you like investing in biotechs where you don't get to hear anything for years at a time, Race Oncology is not for you. And finally, we really have a focus on our investors, something that unfortunately too many companies lose track of, the fact that actually their small investors are a really important part of the development. They focus too much on just where they raise capital from. We're not like that. We've really focused very heavily on looking after our investors, and that's reflected in, since I've come on board anyway in 2019, a really rise from about 4.5 cents up to just recently $4.90 in share price. So it's been quite a ride for those who have been following along. Next slide, please. So this is our clinical pipeline. So we have 3 clinical programs ongoing right now. One in acute myeloid leukemia. We've previously run 2 phase 2 trials in acute myeloid leukemia. That was the indication that the drug was originally approved for back in the 80s. It's now currently going into a phase 3 program, very advanced, very low risk from a commercialization perspective because it's the same indication the drug was originally approved for. The only downside to all of this is it's a relatively small market, maybe 50,000 patients all up as the total addressable patients, and only, of course, a subset of those patients would get treated. The upside of acute myeloid leukemia is it's an orphan indication. Orphan drugs are very expensive, and you can charge a great deal for an orphan drug. That's progressing very well. The two more exciting and larger opportunities are in non-small cell lung cancer, in a particular subtype called EGFR mutated non-small cell lung cancer, in combination with an existing drug called osimertinib. This is a very large market for osimertinib. This year, AstraZeneca, who owns that drug, it's called Tagrisso is its trade name, will probably be selling on the order of $7.5 billion of that drug. We have an opportunity to extend the life expectancy of that drug and increase the sales of that drug and provide an opportunity to keep patients healthier for longer. And the final program, which is currently in recruitment, has recruited early stage patients, is in the combination of our drug with standard of care doxorubicin, which is a traditional chemotherapeutic. Very effective drug, very toxic drug, and very damaging to the cardiovascular system. And our drug can add to the anti-cancer activity, but also protect from the heart. Next slide, please. So I'll just briefly touch on this, what G4 quadruplexes are. They're basically just special folds, structures in the DNA that our drug can bind to. When they do that, it switches off particular genes. And the gene that's particularly interesting for us is a gene called MYC. And I'll talk a bit about that on the next slide. But the most important thing to take away from this, if you've known about race before and not heard about bisantrene before, you might have thought it was a chemotherapeutic. It's actually not a chemotherapeutic. It just happened to be, I guess, put into that bucket for historical reasons. Next slide, please. So why is MYC such an interesting target? Well, it's basically it was discovered a long time ago, and back in 1982, and it's one of the most important genes and proteins involved in developing cancer. So over 70% of all cancers have an increase in MYC activity or dysregulation in MYC activity. And the thing that makes it particularly exciting for us is, whilst MYC's been this amazing target that everyone's been trying to develop drugs for, no one's been able to make a drug to MYC at all. And that's for long technical reasons I can't go into, but it's been really a sort of the holy grail of the pharmaceutical industry to develop a MYC drug. What MYC does is it basically acts like an accelerator of cancer. It's part of the key growth regulating. And when you have upregulation of MYC, you end up with basically the cancer growing more aggressively and faster. So it's super important. If you look at the number of cases, over 1 million cases every year have dysregulated MYC. And you can see there on the right hand all the different cancer types, major cancer types, and the frequency of MYC, elevated MYC activity. But it's really amazing that it turns out that our drug actually targets the one thing that everyone's been trying to work on for 40 years. It's been known all that time. Well, it's been there all that time and nobody knew it was there. So it tells you some of the power that actually doing fundamental research can do and unlock. Next slide, please. I mentioned at the beginning about the IP filing. So we've discovered that if you expose bisantrene to light, it changes into 3 different shapes. These are called isoforms. They're named EE, EZ, and ZZ. Only the EE form has any anti-cancer activity. None of this was known, despite this drug being around for 50 years and literally thousands of scientists working on it. And so we filed 3 new patent applications in September, basically covering the structure of the molecule, how to make it at scale, the formulation, and how to protect it from light in clinical use. And this is very important because it converts to the inactive form at a rate of 1% per minute. So if you leave the bag of drug, it's an infused drug, in an infusion bag, if you leave it sitting around just in the light in the room for 10 minutes, you'll lose 10% of the activity of your drug. It gets converted into the inactive form. So super important. But what it does provide is with the strongest form of IP protection that's available to the pharmaceutical industry. And this has just gone in. So we're in, as far as I'm aware, the unique situation of being in phase 3 at the same time as having a 20-year patent life. It's almost never heard of in the pharmaceutical industry. Most of the time, the IP you have is 10 years is actually doing pretty good by the time you get, or 12 years is pretty good by the time you get to phase 3. All right, next slide, please. Okay, so I'll just talk briefly about EGFR mutated non-small cell lung cancer. Most important things to understand with this is very, very broad opportunities, many hundreds of thousands of cases, particularly in East Asia, where for reasons, genetic reasons, people of East Asian descent are more prone to getting this particular subtype of cancer. It's all treated with a particular type of drug called TKI, or a tyrosine kinase inhibitor. Third generation is what we're up to at the moment. They work really well, but they all fail after a period of time, around 18 months. And when that happens, basically the options for the patients are very, very few, and the life expectancy is pretty poor. You're talking months because there's just really no other treatments. Very competitive area. It's 14 of these licensed. They're all the various players are fighting for dominance. AstraZeneca is the big dog in the space with Tagrisso, but there's a lot of up and comers that want to really, particularly Janssen, what used to be Johnson & Johnson, the pharmaceutical arm of Johnson & Johnson. So a lot going on, big market in the US, huge market in China, to the point where for us, the market opportunity is equal for both particular drugs in both those particular markets. Next slide, please. So this is the Harness 1 trial, which we have just obtained ethics approval for last week. This is where we're going to be screening patients that are on osimertinib using a thing called ctDNA, which is basically just the tumor DNA that's floating around the blood. That allows us to identify patients that have tumor present, and then we're adding our new drug on top of that with the aim of extending the time that patients can stay on osimertinib. If they stay on osimertinib, their cancer stays, as long as they don't develop resistance to that, the cancer will be kept under control and turn from an acute illness into a chronic illness. And you can remain on osimertinib basically indefinitely until resistance appears. A very exciting opportunity that'll be kicking off all through 2026. And most importantly, it's open label. We'll be getting a lot of clinical data on activity, and we can using this ctDNA, we can actually identify whether the patients are responding to treatment very early on. So we should have news flow all throughout 2026 on this trial, and have a pretty good idea if this is actually going to work or not in that time. Next slide. For the next one, yep, CPACs. So this is another opportunity of this drug. The drug has lots of different properties, but because of this MYC inhibition, has the ability to both protect the heart from the damage caused by chemotherapy, in this case doxorubicin, while also enhancing the anti-cancer activity, which is kind of the best of both worlds. You not only prevent the patient suffering from the worst side effects of this treatment, which is a very effective treatment, but also treating their cancer better at the same time. So this is just some pictures here. You can see on the far left there, that's the control, no real scarring. You can see lots of scarring going on the doxorubicin alone treatment in the middle. That scarring is all shown as fibrosis, which is grey in this image. And then when you combine our drug, RC220 plus doxorubicin, you end up with some small amount of fibrosis, but pretty much similar to what was in the original no treatment control. So you can actually end up getting, quite an effective outcome from both of these activities. This is quite a major market because the sales of doxorubicin every year, 20 million doses are used around the world. So you start to see that it doesn't take very many doses to be used in combination. You suddenly got a very large market. Next slide, please. This is just an overview of the trial. We might skip over this one. It's pretty straightforward. And the final one here is just to look at the phase 3 trial, a rapid and affordable path to FDA approval. we have a bridging study to get from the old formulation to the new, and then we go through a dose expansion. This provides a really low cost, rapid path to market. We're talking total cost for this phase 3 trials, 20 million, and a bit over 2 years, 2.5 years to get to approval. So a very nice pathway forward. Next slide, please. And just end on key highlights. We basically have a drug in phase 3, which has been completely de-risked and clinically proven in the indication we're going for, solving real health problems. These are not minor things. These are as big as they become in the oncology space, targeting really major markets in anthracyclines and TKIs as companion drugs. We can target and silence MYC, which is a way of actually going after MYC dysregulation, which is really considered the holy grail in oncology. And we have really good long IP protection over the drug, which is all the things you would want in a new drug in the oncology space. And at that, if we have any time left, turn it over to questions.
Thanks, Daniel. Great presentation. And it was pointed out to me that when you presented at TechKnow in August, the stock was trading at about $1. And as you've mentioned, it's well above that now. So congratulations on the valuation uplift and the work that's been done since that time. There is a couple of questions, so I'll jump straight to them. What are the key value catalysts expected across the cardioprotection, AML and EGFR programs during 2026?
Yeah, so well, for AML, it'll be the initiation of the first bridging study. So if we can show that the old matches the new, we can use all the old data. That's a very small study, only requires about a dozen patients to do. And we'll finish off the Project Optimus, which is the requirement the FDA has. You have to show that you're using the appropriate dose. We'll have all of that. In the EGFR, we should have the first signal that this is actually working or not. And that will be really the key to driving this forward. The other thing is we will have human data on inhibiting MYC, so we'll know that we're actually able to knock down MYC in humans. It's kind of a bit of a funny one because we already know the drug works. We already know the concentration inside the cells, inside patients, and we know that MYC's knocked down because it can't be any other way. But if you want to see us say it's occurring from a human sample, then we'll have that coming through. And the cardioprotection, we should be through the dose escalation, and we should be getting the first signal of that we're actually able to protect the heart. And that's probably the most high risk, if you want to look at it, of all of those. We've been able to show in animals that it works really well and human cells, but yet to be in human patients. But everything else is already being basically proven already in humans. It's one of the nice things with working with a drug that's been through 50 clinical trials and made it all the way to approval, is that you already know the drug works. And it's basically our job is to figure out how it works, which is something that nobody knew. And then once you know how it works, where to best use it and in combination with which drugs. That's a much, much easier thing to do in the biotech sector. Getting a drug to work at all is very, very difficult. 1% or so of preclinical drugs make it through to approval. But it's much easier to take a drug that's already been approved and make it figure out how it's actually working.
That is all we have time for today, Daniel, but thank you for the presentation. We will follow with interest and hopefully see you at TechKnow in 2026. Daniel, thanks for your time.
Thank you, David, and thanks everyone.
Our next presentation is from Painchek, presented by Managing Director and CEO Philip Daffas. Painchek is the global leader in AI-based digital pain assessment, with more than 15 million assessments completed, over 115,000 contracted licenses, and FDA de novo clearance for its adult app in the US. The company has now secured its first US long-term care client and is preparing for a large-scale expansion supported by major integration partners and growing product suite, including Painchek Infant. Philip, great to have you with us and look forward to the presentation.
Thank you, David, and thank you everyone for attending today, and appreciate your time and effort to be here. First, next slide, please. So at Painchek, our purpose is to give a voice to people who cannot reliably verbalize their pain. And we have two novel regulatory cleared products that come in the form of an app that utilizes AI to assess facial features that indicate pain and guide a carer to assess pain and manage pain better for their patients. We have the adult technology, which has been on the market for some time now, and that's mostly primarily focused on people living with dementia or cognitive impairments who've lost their ability to reliably verbalize and communicate their pain. On the other side, we've also just launched recently the infant technology. This is for the opposite, it's for pre-verbal children who've not yet built those communication skills. And this is very much targeted not just to healthcare professionals, but to majority for mums and dads to manage pain better in the home environment. These are two very large global markets. Next slide, please. We started with the adult app, and we started in Australia because that's our home base. And we started in long-term or aged care because we wanted to validate the product here in Australia before going across to international markets. As you can see from the top there, the long-term care or the aged care market is worth close to $500 million per annum. We're in Australia, in the UK, and we've just got regulatory clearance from the FDA for the large US market. On top of that, we're also starting to penetrate the home care market, which is almost 10 times bigger than the aged care market, because that's where people with dementia want to live, and that's where governments are funding care for the home environment. So these are two very big markets, and we're already penetrating both of those. Next slide, please. As David mentioned, we now have 115,000 annual licenses with clients. Many of them are 2- and 3-year contracts, mostly in aged care. And those 115,000 licenses relate to 5.6 million in ARR when they're all fully implemented. We've also got a very strong pipeline, which was valued about $2.1 million coming in the next 2 quarters. As David mentioned, we've got 15 million pain assessments. We document every pain assessment, and we've done that across more than 150,000 residents. And we've got contracts and licenses now, not just in aged care, but also in home care, in disabilities, and some initial hospital contracts. So it shows the depth and the breadth of the Painchek technology and the global opportunity. Next slide, please. We did receive FDA clearance. It was a 4-year program. Painchek Adult is now regulated in the United States as a de novo device. And FDA de novo basically means exactly that. It means we're a first of a kind. We're the first product in the market in the United States to assess pain for people living with dementia. It's a new classification and it's a new product code in the United States. What does it mean? Well, it means we have access to a very large market. The initial market's valued at around $175 million per annum. And as I said before, we're the only medical device actually regulated for that sector. It also gives us some significant competitive barriers. To get FDA clearance, you have to run a successful study in the United States on American populations. The AI has to be validated, and that's a very complex process, along with all the cybersecurity and all other elements. So we've estimated that for somebody to try to copy what we have or try to replicate what we have would take at least 5 years to go through the similar process. And on top of that, we have a US patent protection until 2038, and we have copyright on our technology. And those patents are actually global as well as the copyright. So we're in a very, very unique position. And thirdly, what does FDA clearance mean? It also means in the United States, we can use that FDA clearance as a predicate to apply now for the home care sector and the hospital sector. And I can tell you the home care sector, there are 3 million people living at home in the United States living with moderate to severe dementia, which is probably 3 times the size of the first market we're in, which is the long-term care market. Next slide, please. So what is that first market? Well, the first market we focus on in the United States is called the skilled nursing market, where there's 1.6 million nursing beds, and around 50% of the residents there have Alzheimer's or other dementias. And that's our first focus. Secondly, will be the assisted living sector, where there's 1.2 million living beds, and about 40% plus have moderate severe cognitive impairments, and 11% have dementia. So really big focus for us to get and deliver on that massive market opportunity. Next slide, please. So 1 week after we got the regulatory clearance, we also signed up our first client in the US, in New Jersey, the Jewish home family. In fact, they've been knocking on our door for 2 years asking for the product. We secured the first sale there. We've deployed it. We've implemented it. It's a 3-year contract across their 200 beds. This is some photographs of the training sessions we ran in New Jersey just last month, and a quote from Carol Silver-Elliott, who is the president and CEO. It's also a great reference site for us because Carol Silver-Elliott is actually the ex-president of the leading age group across all of the United States, and she's one of our biggest supporters. So reference groups are very important. We'll build those reference groups, and those reference groups will continue to expand us across the United States. Next slide, please. We also did in last month, and I was there. We attended 2 of the biggest conferences in the United States. We gambled on getting the clearance. We built all the technology, all the collateral, our booths. We attended both Las Vegas conference in October and the Leading Age conference in Boston in November. More than 10,000 potential clients attended those 2 conferences. You can see some shots here of our team in the United States now, some of our branding, which is very much focused on our FDA clearance. And we've gained from that around 200 customer interactions and unique leads. And we continue to expand our partnerships in the US. Also, if you look top right here, that's Carol Silver-Elliott. She is the CEO of New Jewish Homes, and she presented at one of our launch conferences in Boston as well. Next slide, please. So if you look at this is Painchek globally for our adult product and the dementia focus. We are a global business now. We're in Australia and New Zealand. We have more than 30% of the Australian market contracted to us across the 200,000 bed market. We've got a strong presence in the UK with close to 10% penetration of a 500,000 bed market and growing. And now we're in the United States and Canada. The US is a 3 million bed market. Canada's a 300,000 bed market. We have sales in Canada. We've got integration partnerships with Point Click Care for Canada and the US, and we've now started selling in the United States. And those partnerships give us access to more than 2 million of the 3 million beds in the United States. On top of that, we're very close to completing our clinical study in Germany, and we have a German product ready to go into the market under CE mark clearance. And we're going to use the US data, the FDA data, to now approach Japanese regulatory bodies and get regulatory clearance for Japan, which is the 2nd largest aged care market in the world. So this is a global business, very well penetrated and with global presence already. Next slide, please. So I'm going to move now to the infant product, and our infant product it's all about making infant pain visible, making it visible for carers to manage pain better for their children in all environments. It's a significant large market. There's 400 million pre-verbal children living in the world at any one time. And our initial focus is the 150 million born each year to first-time parents. That's the infant market. And the first product is for kids aged between 1 to 12 months of age. Next slide, please. So this is the look and feel of the product. It's a real consumer-focused product. It's a very simple process. It's a 3-second analysis of a child's face, and we pick up the indicators, the 6 indicators of pain for an infant, and document it automatically for the parents or the carer to actually manage care. We document the historical pain events, we document the treatments, and all the trainings built into the technology. So this is great for a family member to manage care at home and to present all the results to their GP or the doctor when visiting afterwards. Next slide, please. Our markets are threefold. We see the biggest opportunity on the left side here, the consumer market, and that's mostly parents with their children at home. In the middle, we see obviously very good opportunities in pediatric wards and various sectors of hospitals and GPs who would use this technology as well, but also to get the healthcare professionals to be recommending the product to family members. And thirdly, we're working on a number of partnerships in terms of working with baby monitor organizations, with big pharmaceutical who provide the drug delivery, the pain relief technology, to create a pain care system where we do the diagnosis, they do the treatment, and then we do the monitoring. And these three factors are being driven all at one time. Next slide, please. As of September, we launched the product. It's on the Apple Store. It's on the Google Play Store as well. We had 367 downloads as of September 30th. We now have more than 500 downloads, and we're monitoring how that's working with those clients. And these are mostly parents work with very young children. And that's in Australia only so far. And once we put it right here, we've made some corrections. We'll then go globally. Next slide, please. So one thing we have done as well is we've worked with a group called CPR Kids Australia. This is a group of pediatric nurses. They love the product. They've come and looked at what we're doing. We've had some meetings with them, and they've worked with us on education. And one thing we're doing with the app as well now is we're creating 3 versions of the app. They're all 1-year subscription profiles, but they have different educational models. So our goal is to not just provide the app for parents to use through that first year of life of their infant, but also to give them the educational tools, things like how to manage immunization, how to manage teething, this thing called purple crying, where kids cry a lot between 2 weeks and 5 months of age, so they can deliver better care to their children. And finally, next slide, please. This is a summary, really, of what we're doing. This is the forward-looking elements. So 3 focuses for us. We're going to really build our US market entry and penetrate towards that 10% level in the United States, which we've achieved in Australia and the UK already, and expanding to home care. We're going to continue to grow middle pillar, our business in Australia, New Zealand, and enter into the German markets. And finally, on the right-hand side, expand the infant product into other markets such as UK and Canada early next year, and also launch some new technologies. We've got a toddlers version, which is for kids between the age of 1 to 3. That's coming out next year. We have a vocalization technique to differentiate between a cry of pain and no pain using the microphone on a device, a mobile phone, and we have a disabilities prototype coming out in conjunction with the West Australian government. So that's the focus for the future, but we're also in a very good position today. And I'll hold it there.
Thanks, Philip. Great presentation. A lot being done this year, clearly, and a big year ahead. Probably an obvious question. What are the next steps for scaling Painchek in the US now that FDA clearance and final first customer onboarding are complete?
Well, we attended those 2 conferences. We built a team in the United States, mostly based on the East Coast. Our big focus in the United States will be Northeast, because that's where 60% of people living with dementia in aged care facilities actually live. It's very regionalized. And we built a team in that period. We've got people in New York, we've got people in Boston, we've got somebody just over across. We've actually moved one of our top guys from Australia across to head up the Canadian business as well. And that team is working together to attack the North American market. That's both Canada and the United States, but very much focusing on that Northeast, where the majority of people live with dementia, either in aged care or living in the home environment.
And how important are CMS reimbursement pathways, and where do they sit in your commercial timeline?
Well, being a regulated device, as you can see there, bottom left there, CMS reimbursement is one of our goals. Being a regulated device now, every regulated cleared device in the United States automatically goes through a CMS reimbursement review. It's a black box process. Yeah. So we will be reviewed for reimbursement over the next 3 to 6 month period. We don't control that. That's done automatically. And either we get a reimbursement code, or if that doesn't happen in the first instance because we're novel and there's no reference point, we will then apply for one. So yes, very important. But we believe there are some CPT codes that we could access already, being a product that helps monitor pain. So we believe there are a number of areas that we could actually penetrate automatically. So we're working on those. And
you did touch on integration partnerships during your presentation. The question that's just come in is how important integration partnerships with Point Click Care, Eldermark, and Yardi support rapid US penetration?
Well, between Point Click Care dominate the long-term care market, and companies like Yardi are new clients. We have partnerships and integration agreements with both those two, and they focus on the long-term care sector. So like Australia, we have like 15 partnerships for integration partners. We've got those two already working, and we've got Eldermark being established. Now, Eldermark are mostly in the memory care units, which is a step down unit from, say, a skilled nursing facility. The difference between the United States and Australia is in the US, it's a very consolidated market. 3 or 4 companies dominate that sector. So you just need to work with 3 or 4. While in Australia, we had to work with 10 to 15 companies because it's a very fragmented market. So it's actually going to be far simpler and easier, we believe, to penetrate the US because we don't need to work with 15 partners. We can work with 3 or 4 that give us access to 2 million beds.
Now, there's a question that come through, and I'm going to ask it, but I don't want you to get in trouble with the ASX. So just think about the answer before while I'm asking the question. What are the forecasts in terms of the company becoming cash flow positive? What I'll probably add to that is cash flow positivity important, or scale and grabbing market share the most important thing in the short term?
Well, they're both important, but I would say the goal is to be a global business. I mean, I work for Cochlear. Cochlear became a big company and a very valuable company by becoming a global business. I could always say this: I could make us profitable tomorrow by just stopping everything externally and just focus on Australia. But then we'd be an Australian-only business, and that's not what the goal is. But as you can see here again on this slide, we believe the Australian business and the UK business will be operational break-even in this coming year. We've got enough licenses there to show we get to operational break-even for those countries. But we're still investing, obviously, in the US and places like Germany and Canada, and we want to get into Japan because we want this to be a large, successful, and profitable global business.
On that note, Philip, we will leave it there. Thank you very much for your time.
Thank you, David, and thank everyone for your time.
Our third presenter is Mark Pivac, CEO of FBR. FBR is the developer of the Hadrian robot, the most advanced autonomous bricklaying system in the world, and has now completed residential and commercial builds in Australia and the US. Mark, welcome.
Hi, David. Hello.
We've got you, Mark. Over to you.
Yeah, could you get things back on my screen, please? Not sure what's happened here. Hang on, here we go.
Back on track.
All right. So apologies for those slight technical hiccups. Let's get straight into it. Thanks for the introduction, David. I'm Mark Pivac, CEO at FBR. Look, if you haven't realised it, Australia's in the middle of a housing crisis. And that, when I say we're in the middle of it, it's been around for a long time, and we don't see it going away. One of the big issues is that in Australia, like many parts of the world, we rely on bricklaying. And one of the big issues there is that it's a fairly unattractive trade for young people. The age of masons is just generally increasing. Young people don't want to lay brick and block. And this has meant that markets have opened up to a lot of alternative materials, but brick and block really is one of the best ways to build a house. And that's not just in Australia, but also the US, Europe, all throughout Asia, around the world, in fact. So what FBR has done, could I have the next slide, please? So what our solution is Hadrian. And what this is a big robot which builds the walls. Its key features are quickly deployed, so it's truck mounted, it drives out to site. We can build the walls of a typical house in a day, as opposed to 2 to 6 weeks for a team of manual masons to do that job. It's a digital solution, and the jobs that it creates are digital and high-tech, robot operating machinery. We really get rid of all the heavy lifting. So it's now an attractive trade for people to look at getting involved in the construction industry. What we've really done is taking the automation that's typically seen in factories and figured out a way to get that out on site. Now, in doing that, we've created some really key technology, and the main core technology that we have is dynamic stabilization. And what that enables is really big robots to do really accurate jobs. And I'll get into some of the adjacencies and other applications of that in a little while. But having a really accurate house structure, it enhances not just the production of the walls, but the entire manufacturing process. So traditionally in manufacturing industries like car making and so on, everything is built off-site and it all comes together. And we know that in the factory, when you go to fit the doors, they're going to fit inside the door frame. When you go to fit the windscreen, it's going to fit inside the windscreen. Every single part on the car is interchangeable. Traditionally, a lot of that has not been the case for houses. You build the walls, the manual masons do a great job, but it's just not accurate to have everything else pre-manufactured. And there's a lot of measuring and fitting and on-site work to actually make things work. By having a really accurate structure, it enables parallel manufacture. So the enhancements to the building supply chain go way beyond Hadrian, and it's really up to builders to embrace this potential to really revolutionise their delivery of housing to the market. Next slide, please. So how it works, it's truck mounted. As I mentioned before, we have laser guidance. So what we do is we set up a laser tracker, and that tracks the end of the boom. You can imagine a boom which is long enough to build a house. It's about 32 meters long, can bounce around quite a bit as product moves through it, as the wind blows, and even just the inaccuracy of setting up the Hadrian itself on site. We don't have to set it up perfectly. The laser tracker takes care of all of that. We survey the concrete slab with that laser tracker, and then Hadrian builds in that coordinate system of the house and builds very accurately. So the house is actually defined by CAD definition off-site and ahead of time. CAD is computer-aided design. It's a very common software which is used to design all manner of products, including houses now. So the builders are familiar with that. And we have developed special software which imports that CAD design. We can quickly create the design in our software. And it figures out where every single brick goes in the house. We also work out where all the cut bricks need to be, and Hadrian can either take pre-cut bricks on the pallets, or we can fit a saw into Hadrian, which is also computer controlled, and Hadrian will cut the bricks and blocks to suit. Could I have the next slide, please? So our main tenets are that Hadrian is obviously a lot faster. It's also got the accuracy to enable parallel manufacture. There's a massive improvement in safety. You can see this building site here. There's no ladders, no scaffolding, very little waste around the building site. So all of those trip hazards, working at height hazards have all disappeared. All the manual handling hazards have gone. We handle as much as possible through machinery such as Hadrian itself, telehandlers handling full packs of bricks. One of the big things people don't realise is that there's two parts to this problem. Laying the bricks is probably the easiest physical part of the job, certainly the most skilled part. But the real laborious part is a typical house has about 80 tons of bricks, which at the moment are currently manually moved from wherever they're delivered. And they do try and deliver them close to where they're being used. But those 80 tons of bricks and blocks have to be moved by the bricklayers to where they're being laid. All of that delivery is automated with Hadrian. We also have massive waste reduction because we know where every single brick is going to be, and we can reuse off-cut bricks. There's quite a big waste reduction. Typically about 10% of the bricks in a building either over-ordered and wasted. We can cut that down to virtually zero. You put all those things together, the speed, the accuracy, the safety, and the waste reduction, and that obviously leads to a cost reduction. Next slide. Okay, so Hadrian can be used across quite a wide range of the construction industry. It was originally targeted for residential single family. Of course, we can do residential multifamily as well, small commercial structures and also infrastructure. Hadrian is not just limited to the reach of the boom. We can reposition Hadrian and make walls match up perfectly. We've done that in some of those larger structures like the one at the bottom right of the screen. This is a 16 townhouse development in Willagee, multi-story, required multiple setups of Hadrian, and all of those walls matched up perfectly. Next slide, please. So we're at the point of commercialization. We've done a lot of demonstration work. We've shown that the technology works. And across those demonstration projects, we've completed a lot of different kinds of structures. They were chosen not necessarily as best fit for Hadrian, but to show the diversity of the technology. We built 5 houses. That's one on the bottom left in Wellard, which is a typical suburban build in Western Australia. New subdivision went in. We built 5 houses in a row down one side of the street while manual builders built other houses on the other sides of the street. And the speed difference was really striking. With Hadrian at that time, we would come in and build a house in 2 or 3 days, get the walls up. And on the other side of the street, the bricklayers may have only got around to chalking out the slab and perhaps standing up 1 or 2 door frames. We've also built a childcare centre, commercial townhouses, 8-story townhouses. And we also deployed over to the US and did a 10-house demonstration in Fort Myers in Florida. They have a lot of Besser block building over there. It's all cyclone or hurricane rated. And we actually built while there were cyclone or hurricanes in the region. And we've recently signed an MOU for a Hadrian sale to a Northern Territory builder for 7.8 million, and another sale to a New South Wales builder. So we're just working through the details of those contracts now, and we'll update the market as appropriate. Next slide, please. So as I mentioned earlier, our core technology is DST, or dynamic stabilization. And this has a number of different use cases, particularly anywhere where you need to use large robots. Typical industrial robots work up to a reach of perhaps 3 meters at the very most. 1.5 meters is much more typical. Our dynamic stabilization technology enables us to build accurate robots which can reach basically unlimited. As I mentioned before, we've built Hadrian already, which reaches out 32 meters. And in Western Australia and also Korea, we've identified a market for an 8-meter reach welding robot. And this is our next product, which is called Mantis. And it has applications across shipbuilding, heavy fabrication, and large-scale metal printing. We've just launched that product ahead of actually having a physical one. And we're in the process of building those first prototypes. We've got an excellent potential sales pipeline with a lot of customers lined up just waiting to see the actual physical demonstration of those Mantis robots. Next slide, please. So I mentioned South Korea and Samsung Heavy Industries. We've been working with Samsung Heavy Industries. We have an engineering services agreement in place, and they approached us. It wasn't the other way around. They approached us because they'd seen DST. They build, as you can imagine, very large ships, things like LNG carriers, floating offshore oil and gas ships, container ships, bulk carriers, that sort of thing. This shipyard here employs 25,000 people, plus about another 15,000 contractors on site. And a huge amount of the shipping industry is welding and also complex fit out. So they approached us with they have a mandate to really automate their processes. And they approached us to see if we could help them. They thought the DST would be very applicable, and it is. Our first phase was to do something to demonstrate to them that we could actually automate this particular process, which they were interested in. It's not related to DST, but it was very important that that worked. We've done that. We've demonstrated that. They've been down and visited it. I was up in Korea last week, and we're just working through the next phases of work now. So as I mentioned, phase one's been delivered, where we conducted a physical demonstration and validated that. And we've submitted that, and we're just waiting on their final sign-off on that. And my trip last week was in relation to the next phases of work. And as those turn into contracts, we'll update the market on those things. Next slide, please. So here's a corporate snapshot. We think FBR represents some pretty good opportunity at the moment. You'll see earlier in the year, we had a much higher market capitalisation. We had a bit of a misstart with the launch in the US, the change of government there, change in economics. We still have a Hadrian in the US off the back of that demonstration program, and we're working through a lot of potential opportunity over there, but really just waiting in the wings for their economy to improve over there. Here in Australia, we see a really good future. The government has typically tried to solve the housing crisis by stimulating demand. We're now seeing that they're starting to stimulate supply. For example, the West Australian government has just recently launched a $50 million housing innovation fund, a mix of grants and loans, and we'll be applying for that along with some builders who are very interested in introducing Hadrian technology into the WA market on a commercial basis. So off the back of that, I'll hand it over for questions. Thank you, David.
Thanks, Mark. Great presentation, and a company I've certainly watched with interest as Hadrian has developed. A couple of questions have come through, so we'll jump straight to them. What are the key steps towards converting the existing MOUs for Hadrian sales into full commercial deployments?
Yeah, so look, it's a really good question. As you know, an MOU outlines what the parties intend to do, and the commercial contracts with a $7.8 million piece of equipment cover off on all of the details. So we're going through those negotiation phases. It's also contingent on those potential clients gaining finance. We're working with them on that and also engaging with finance companies as required. It may involve some of those potential customers forming partnerships just to expand the scope of work and to get things financed and underway. So we're working through those things. The building industry is very busy at the moment. So getting the attention and getting things devoted to the change management that's needed are some of the challenges which we're facing, but we're quite confident that we'll work through those in the near future.
And how do the DST and Mantis platforms position FBR in broader global automation markets?
Yeah, so look, it's a massive market. We've also about to launch another product, which we'll call Firehawk, which is for laying refractory bricks in the steel industry. There's about 1,000 steel mills around the world which are just continually laying refractory bricks to reline their steel ladles. So that's one aspect. Obviously, there's an immense amount of heavy fabrication done around the world, and there's not really an off-the-shelf robot available for that. We see that as massive markets. On our website, we have some fantastic presentations on Mantis and DST and also Hadrian. And just to give you an idea of the scale of the problem, the Australian Welding Institute estimates that there's about 78,000 welders shortage just in Australia alone. And around the world, it's millions. So, you know, the way to solve some of those issues, obviously training more people, but automation and robotics is really kicking off. There's a lot of interest in small cobots in the fabrication industry, but there's a lot of issues with moving those around the plant, and that's where Mantis comes in. So between Mantis, Hadrian, and Firehawk, you know, we have total addressable markets that are absolutely massive.
On that note, Mark, thanks for the presentation, and we look forward to following with you and the company with interest.
Thank you, David.
Thank you. Our final presentation today is from Paradigm Biopharma, led by Managing Director Paul Rennie. Paradigm is progressing the global phase 3 trial for Zilosul, targeting moderate to severe knee osteoarthritis, a condition affecting more than 500 million people globally, with 81% of patients unsatisfied with existing treatments. With more than 60 sites activated across multiple continents and an interim analysis anticipated mid-2026, the company is approaching a significant inflection point. Paul, welcome to the webinar, and we look forward to your presentation.
Yeah, thank you, David, and thanks everyone for joining online today. Could I just say I'm going to rush through the presentation fairly quickly because we have 10 minutes, but the final slide, if people get a copy of the presentation, we'll see there's contact details there of Simon White, my colleague, who's the Director of Investor Relations, and also my contact details so people can reach out to either Simon or myself at any stage if they have any further questions. Next slide, please. Our standard disclaimer applies, and we go straight into what is osteoarthritis. Now, I need to debunk one of the common myths that surrounds osteoarthritis. A lot of people think osteoarthritis is simply wear and tear, and over time the joint wears down and the cartilage wears down, and you end up with osteoarthritis. What we now know is that it is actually a chronic degenerative disease. And we understand at a biochemical level all of the factors that are occurring to lead to the breakdown of all of the tissues in the joint, not just cartilage, but cartilage is the hallmark of osteoarthritis, but it also means the bone that supports the cartilage is breaking down and changing shape. We also know in the knee joint, for example, the menisci are also deteriorating, as well as ligaments and tendons. So all of the joint is basically degenerating, and the rate of degeneration exceeds the amount of regeneration that can occur, and then you ultimately lead to failure of the joint. The common symptoms of osteoarthritis, for those listeners who may have osteoarthritis will know, or they have family members who have osteoarthritis will also know, is a very painful joint, very hard to move, and it's also a very dysfunctional joint, often stiff and very, very painful to move and bend in relation to the knee. And so therefore people are severely debilitated in terms of their daily activities. We do understand the biochemistry, and what companies like Paradigm are trying to do is to understand, can our drug slow the rate of degeneration and increase the rate of regeneration? And in our last phase 2 trial, which some of the results of that study are being sent off for peer review and publication, and we hope that that will occur very soon, shows very, very clearly that this drug is able to change the disease biomarker profile of an osteoarthritic knee compared to placebo. So as placebo, the disease biomarkers are increasing over time, but what we saw with our drug was that the disease biomarkers are actually reducing over time, so therefore indicating that maybe the disease is slowing down. And we also saw on some advanced imaging, quantitative MRI, that there was some increase in the cartilage thickness of those patients who were on our drug. On the right-hand side of this slide, you'll see there's 4 radiographs. These are provided there to try and show people that it is a progressive disease going through well-documented, standardized grades of disease, which was developed by Dr. Kelgren and Lawrence. And you see grade 1 is a relatively healthy knee, good alignment, and also quite a good space between the end of the femur and the start of the tibia, which is the knee joint. What we refer to this as is joint space width. And although we can't see the cartilage, we assume because the bones are separated, there must be a amount of cartilage keeping those bones from contacting one another. You'll see grade 2, there starts to be a bit of malalignment and the joint shifting laterally. Grade 3, you'll see that there's some changes in the bone occurring, some outgrowths. And then grade 4, you can see at the final bottom right-hand radiograph, the tibia and the femur are in contact with one another, indicating that there is now no longer any cartilage in that particular region. The biomechanics of that joint have also shifted, and that becomes a very painful disease. Going to the next slide, please. As you mentioned in the introduction, David, over 500 million people have osteoarthritis. We know that around 70% of people with osteoarthritis have osteoarthritis of one or both knees, reducing the addressable market to 365 million people. And we know that people with moderate to severe knee osteoarthritis is a further discount. So we have around about 240 million people worldwide with addressable moderate to severe osteoarthritis, which is our focus. We also know that around 81% of people with osteoarthritis are very dissatisfied with their current medications. Next slide, please. So what we know is that in terms of the market, this is a very significant unmet medical need. So we know that there's limited treatment options, and they really only focus on short-term pain relief. There's no indication that these products that are currently used will help slow the rate of degeneration and increase regeneration. That has not been shown with these compounds like non-steroidal anti-inflammatories, corticosteroids, or hyaluronic acid, etc. We know that it creates a huge economic burden in the middle panel of the slide. That means that governments across the world are seeing ever increasing amounts of money spent directly on treating people with osteoarthritis, and osteoarthritis is the major form of disability for musculoskeletal indications, and it has around about $136 billion of direct cost to treating people with osteoarthritis in the United States. So in the final panel there, we know that there is a very strong demand for safe and effective long-term pain relieving drugs. And that has been reinforced by this year in September 2025, the US FDA put out a position paper which actually said that they were looking for ways of increasing the availability of non-opioid based treatments for chronic pain. So there's a FDA guidance that we've looked at very carefully, and we believe our drug meets those requirements. In other words, it's safe, it's effective, it can provide long-term relief without being addictive, and all of those sort of characteristics. Next slide, please. So the unmet medical need arises when you look at this particular slide, and if we start at the top left, we'll see the green color means effective and the red color means ineffective. If we look at the top line as an example and just cast our eyes down to the bottom of the slide, across the bottom you'll see the stages of osteoarthritis: minor, mild, moderate, and severe. As the disease progresses, you can see the class of drugs like analgesics or NSAIDs are quite effective in minor OA, but as the disease progresses past mild OA, you start to see that those products are no longer effective. And that is the case for the opioids and steroid injection. So basically, when you look between that moderate to OA lane and cast your eyes up, you'll see all of the medications are largely ineffective in treating osteoarthritis, which creates this very large unmet medical need. Next slide, please. So what is Paradigm doing to address this osteoarthritis spectrum, which, as I mentioned, goes from minor to severe? We have a dual PPS product-based therapeutic solution that we are hoping will transform osteoarthritis management across the globe. We aim for both of these products to shift the treatment to an earlier stage in the disease to try and encourage the reduction of degeneration and encourage regeneration, so patients don't have to go through that journey of mild all the way through to severe. And both of these products are heavily aligned with the US FDA focus on non-opioid chronic pain solutions. Next slide, please. So this is how we see Paradigm's future. Xylosol, which is an injectable form, subcutaneous, I should add. So subcutaneous injection of PPS is currently in a phase 3 program, and that really addresses the moderate to severe osteoarthritis sector. But as I mentioned, we know that there's around about 250 million people currently with moderate to severe osteoarthritis globally, which means there's also several hundred million people who are at the minor to mild stage, and they haven't progressed to moderate to severe OA at this stage. Hence the introduction of a new concept, which is an oral product So as I mentioned, xylitol subcutaneous injection for the moderate to severe. The oral product being developed is called pentocoxib, which, as the name suggests, is a combination of oral PPS and a COX-2 inhibitor, such as Celebrex or meloxicam, and people with osteoarthritis will know those drugs very well. So that then this combination produces a non-opioid solution for people with mild to moderate osteoarthritis, where what we found in a small comparison study was that PPS and COX-2 together were more effective than the COX-2 inhibitor alone. So it's already shown some very good signs that this could be a very successful product going forward. However, our focus is very firmly on the phase 3 program, because that is really where a lot of money can be generated, and we want to move through that program and get to the revenues as quickly as possible. Next slide, please. So the phase 3 program, this is a snapshot of where we are now. In the first stage, I'm moving from left to right across the timeline here. The study design is 466 subjects who will be randomized 1-to-1, one group getting placebo, the other group getting the active drug. And we're evaluating subcutaneous pentazan polysulfate sodium, or xylitol, for moderate to severe osteoarthritis. The dosing regimen has already been proved through a phase 2 dose ranging study, and the lowest effective dose has been estimated to be 2 mg per kilogram twice weekly for 6 weeks. So it's a total of 12 injections. There's no further injections, but what we found in our phase 2 study was that those 12 injections over 6 weeks is sufficient to then reduce the pain meaningfully and statistically significant compared to placebo out to 12 months for both pain and function. So it's an ideal product in terms of the requirements from the FDA guidance document. The primary endpoint will be change in average daily pain at day 112, which is roughly 3 to 4 months, which is a very significant improvement over any other drug on the market. And we're also including a number of secondary endpoints, which includes the patient global impression of change, which is very important to the FDA, and also imaging and biomarkers. So imaging, MRIs and X-rays will be taken to see whether there's some reduction in the degeneration of the joint, and if approved and statistically significant over placebo, could go onto the product label. The trial oversight is being conducted by 2 CROs, Advanced Clinical in the United States and also NBCD, who's joined us recently, who are running some of the centres that have been very high recruiters in the past, and NBCD's out of Denmark. And as you mentioned, David, the company and all of our existing shareholders are very excited with the idea that we will have an indication over the success of the program around the middle of 2026. So literally 6 to 7 months away before we know what the likely outcome of the study will be. And if positive, then we believe that that will be a very significant milestone for the company, attract a lot of commercial interest, and also see us on our way to applying to the FDA for registration. So next slide, please. Again, some more details about the phase 3 program. We have over 60 sites across Australia, US, Hong Kong, and Moldova on track for full activation by the end of this month. In the centre there, hundreds of patients are already in screening, and strong conversion rates from screening to randomisation. So people are being treated currently under the phase 3 program in both the United States and the USA, and we also expect to have some screening ongoing in Hong Kong and Moldova as of the middle of January 2026. The final panel there just mentions again NBCD working alongside Advanced Clinical. So we've gone with this complementary CRO to complement our primary CRO to make sure that we have some competitive tension, because obviously the CRO that recruits the most patients will generate the most income. So we think that this is a very good way of making sure that we get very good recruitment rates so that we can achieve that interim analysis. Next slide, please. So these, I think, are some of the investment highlights for people watching. In terms of de-risking, Paradigm has conducted multiple phase 2 studies. We've done 2 safety and efficacy studies over the journey. Both of those studies had positive outcomes, and we did a 3rd phase 2 study, which was our dose ranging study to establish the minimal effective dose. Across all of those studies, we saw very consistent data outcomes, and we have a very good idea of how the drug is likely to perform in the phase 3 study. We also saw very important disease-modifying activity, which means that the rate of regeneration was exceeding degeneration, as indicated by quantitative MRI and synovial fluid biomarkers. We have treated over 800 subjects in Australia based on the TGA Special Access Program, and we have seen people typically apply for redosing at around about 12 to 18 months. So we do know there is a good sustained activity of the drug. We do have an optimized phase 3 design, which means for investors, we have got agreement with the FDA before we started our phase 3 trial, which means that we're unlikely to receive any further questions about the protocol from the FDA, and we can now complete that knowing that the FDA has seen the design and signed it off. The phase 3 clinical trial has commenced. As I mentioned, subjects currently being treated in the US and Australia. The program has got fast track designation from the US FDA, which means we'll move through the FDA faster than other applicants because it is a fast track designated program. As I mentioned at the outset, it's a very, very large market, over 500 million people with osteoarthritis, and 81% of them are dissatisfied with current treatments. And the near-term inflection point will be 25% of patients recruited, 50% of patients recruited, 100% of patients recruited, and the interim analysis at the middle of 2026. Next slide refers to those contact details that I mentioned before, David. So I'll wrap it up there and see if there's any questions from the audience.
Thanks, Paul. We have a few questions come through, so we'll jump straight into it.
Sure.
How have refinements to screening criteria improved enrollment in the phase 3 program?
Yeah, it's fairly technical, David, but I think an overarching comment would be, look, the less interventions or requirements of a patient to turn up to a particular clinic at a particular time encourages greater enrollment and sustainability in the study. I think if you're asking patients to come back at frequent intervals, then I think you do run the risk that some people, become tired, exhausted, and just drop out of the study. In terms of recruiting, again, if the number of exclusion criteria is reduced, then the likelihood of someone going in from screening to an active participant in the trial is increased as well. So I think we sat down with the FDA, we went through all of the data from our large phase 2 study, which was over 600 subjects, and we were able to demonstrate to them that any of their concerns that they may have had been supported with good clinical data, and therefore they were able to reduce some of those interventions that I mentioned, like going back to a clinic first thing in the morning, or having less contact with the hospital, all of those things adding up to a greater retention rate within the study.
A question's come through that I think sort of extends that a little bit. How do advanced clinical and MBCD complement each other operationally across the global trial footprint?
Yeah, great question. So first of all, Advanced Clinical is a US-based CRO with operations in Australia. We also think it's important to have some diversity in terms of the ethnicity within the trial. I mean, we have to have somewhere in the region of 50% of the subjects coming out of the United States. The FDA hasn't put a a strict percentage on the trial, but generally it's around about that 40 to 50% from the United States. But it's also important in other jurisdictions to have some local ethnic populations treated with the drug. So that's why we think Hong Kong is very interesting. Hong Kong has been a very fast recruiter, and MBCD have a good relationship with the treating centres there. They can introduce us to a site that can gear up and start getting ready for the study in an accelerated manner. And also we note that there is a 1+ program being initiated by the Hong Kong regulators, which says that if you get a registration in another jurisdiction, such as the United States, you can then apply to the Hong Kong regulators as long as you have some Chinese data, and which is why we're doing that. We can then segregate that data from the rest of the data, say this is all Hong Kong patients, and then you can get registration very, very quickly, and you get access to what they call the Greater Bay Area, which includes up to 50 public hospitals and has a catchment area of around about 80 million people. So it could be a very early entry as soon as we get the US registration to pivot to Hong Kong, make the application and get revenue much faster than other jurisdictions, which may still require further studies.
Final two questions. Can you outline the potential outcomes and timing associated with the mid-2026 interim analysis?
Yes, so we expect to have the interim analysis, which will really probably have 3 broad outcomes. The Data Monitoring Safety Committee will review the data in an unblinded manner, so they will have the code broken. They will review the results of up to 50% of the patients in the trial to date. They will then be determining the drug effect size, and our statisticians have predicted that if the drug effect size is less than 0.1, that means that the trial is unlikely to be statistically significant at the end of the trial, and it would be futile to continue. So we would announce that we have a drug effect size that is not sufficiently large enough to be able to continue the study. Another outcome would be that the drug effect size is between 0.3 and 0.39, which means that the Data Safety Monitoring Committee would say you are all good to proceed. So there is no safety events, and the efficacy at that point of between 0.3 and 0.9 puts the probability of success when we get to 466 subjects, not the 233, but the 466, that we would have upward of 90% probability of having a statistically significant outcome. And then if the drug effect size is above 0.4 or above, then we would have the necessary data to apply for an early stopping of the trial because the efficacy is overwhelmingly positive. So they're the sort of outcomes that we would be looking at, but it's all driven by statistics, and it's all driven around probabilities, and our biometrics department have been heavily involved in designing this program, and we feel very confident that it's going to be 0.3 or above, because that is the typical drug effect size that we have seen in our phase 2 studies. So I think we have a degree of confidence that we'll be proceeding on with the trial come the interim analysis. The interim analysis will also be able to give us a very strong probability of success, which commercial companies who've had an interest in this area but have failed with their own programs would like to make sure that they could have an indication that this is going to be successful, and therefore talk about commercial transactions at that point.
Brings me to my final question. How is long-term real-world evidence from the SAS program informing regulatory dialogue and commercial planning?
That's a great question, David. And look, I think the gold standard is always a randomized, double-blind, placebo-controlled study. However, the agency has put out some position papers over the years to say that real-world evidence is very important, and we have that real-world evidence of, as I said, over 800 subjects. where we can point to the fact that this is the type of result that happens in the real world. These people are not part of a clinical trial where they've been, if you like, selected as part of their inclusion-exclusion criteria. These are people who have osteoarthritis, who have failed all of the available medications. They've gone on to this medication and had success. So the FDA looks upon it as very important previous clinical experience with the drug. It adds to our safety profile. There's a number of different reasons why it's very important, but we do think that at the end of the day, the FDA will only be approving the results of a double-blind, placebo-controlled, multi-center study. So that's why we're doing the large phase 3 study. But we do think, as far as investors are concerned, we have shown in a real population of people with osteoarthritis in Australia and the US that the drug has performed extremely well.
Paul, thanks for your time. We look forward to following Paradigm Biopharma with interest. A big year ahead, some big milestones on the horizon, so investors should watch and follow the company with interest. Paul, thanks for your time.
Thank you, David, and thanks to the listeners.
Thank you all of today's presenters, and thank you to everyone who joined us for this December TechKnow Invest webinar. This marks our final online session for 2025, and we appreciate the support from investors, analysts, and partners who have made part of this expanded webinar series throughout the year so successful. We look forward to continuing these sessions into 2026 as we lead into the 2026 TechKnow Invest Roadshow in person on the 29th of July 2026 at the Sydney Swiss Hotel and the 30th of July 2026 at the Melbourne Grand Hyatt. Put it in the diary. It will be an event not to be missed. A recording of today's session will be circulated shortly. Thank